Hey everyone, thanks for coming to our webinar today. We've got a few people going to be trickling in a little bit, so we'll get started in just a few minutes. In the meantime, so you can figure out how to use the chat and the Q&A and the polls and stuff, we'd love to hear, where you're calling in from, so your city, state. And I apologize, we don't have any music, so it's just like awkward silence here until we get started.
Matt, you can't sing for us?
No, I have to have a guitar in hand.
Fair.
And unfortunately.
Unfortunately, I don't right now.
No. Yeah, we need some good. I know you're down in Austin, so Austin, Texas, right?
Yes.
Yeah, it's where the best music's coming from.
Totally. There's a huge music scene down here. I think with COVID, it's gotten put off a little bit, but I think it's starting to kind of reignite, which is exciting. But it's interesting. I think the music here is like half country, half like metal punk, which I don't think I anticipated when I moved down here, but is awesome.
Yeah.
I mean, nothing beats just people playing instruments in general.
I know, just like good barbecue, good music, and good beer. I don't know why everybody doesn't live in Texas, to be honest.
That's a good question. I'm not sure. But no one else come because it's already getting very expensive here. So
True. Awesome. Hey, Glenn, I see you're from San Diego. Sorry about the Chargers. They look good, though. But San Diego, one of my favorite cities that I've never been to, but I got to get out there as well.
I liked they had like really blue socks. I don't know a ton about football, but their uniforms, they have shockingly blue socks, which I'm interested in.
Honestly, I think they have the best uniforms. Just like the light blue and yellow. It's awesome. I know, Glenn, I'm sorry. We're talking about the Chargers now, but
I know
it's just cool to see. Cool. So yeah, we're going to give it just a few more minutes. We're going to let a few more people hop in here before we start today's presentation. But really excited. We've got some really, really good stuff today that I think everybody's going to get a lot of actionable advice from. So once we get this thing kicked off, we'll roll there. Glenn said, yeah. Yeah, cool. Yeah, we do have to figure out how to get music in here one of these days. I think there is a way. This audio tab.
True. It'd be fun if you could choose like which artists you wanted to play also.
Yeah, like a Spotify integration.
Yeah. I've got to imagine someone's thought of that, but
yeah. Cool. Just play true crime podcasts all throughout the
entire time. That or just like TikTok songs, I guess, would be like the two most popular that we could play.
Yeah. As long as it's not that like Applebee's song. Oh my gosh.
Fair.
One more time.
Fair. I'm starting to hear TikTok songs now on TV commercials. Watching the Cowboys game last night, and I heard a TikTok song on the I want to say it was like Popeyes or like some fast food chain was playing like a very popular TikTok song, and I was like, oh no, it's moving off the app into real life. I'm nervous.
The power of marketing for sure. Yeah.
Very true.
Cool. Hey, Bo, we are going to get started literally, I think we can get started now. Yeah, I know we have a couple people in. I'm sure a few people will join. So we'll go ahead and get this thing kicked off. Again, thanks so much, y'all, for attending today. I know you got busy schedules. Home improvement industry is crazy right now, but we really want to give you some good actionable advice today. So financing is a hot topic right now. And Sarah, we were talking about this before the webinar, but I don't know if everybody's seen that viral video of the contractor who snuck into the bathroom that he did in the homeowner's home and took the sledgehammer in there and smashed up his work because he didn't get paid. That's what we're trying to avoid. And we're going to do that by, talking about a few things. And really our goals for today are, one, to help you figure out if financing is right for your business. If you don't have it right now, it's not perfect for everybody of every size. So we just want to make sure that we kind of clear the waters there and make sure you know what to expect. Two, we want you to learn how to really invoke that financing in your sales process so you can close more deals, set more appointments, and really use it as a sales tool for your team. Three, at the end of the day, we just want to make sure you can leave the sledgehammer at home and get paid for the work that you do. So my name is Matt Miner. I am the growth marketing person here at Hatch. Unfortunately, our CEO had a few things come up, as CEOs do. So you get the backup quarterback today. And we're joined by our good friends over at Hearth and Sarah.
Yep. And I'm the business development manager here at Hearth. So work with a lot of our partners to kind of help educate and talk to contractors like yourself on the value of offering financing within your sales process. Have been working in the home improvement space for about 6 years. So love it.
Great. Awesome. So a little bit on today's agenda, set the scene for you know what to expect. One, we're going to talk about why financing, and really this is about how homeowner demographics are changing. So we're going to talk about a lot of millennial homeowners, what they're receptive to, and you'd be surprised to learn a few stats that we're going to show. At the end of the day, it's going to help you sell more in the years to come. Two, we're going to talk about when and how to offer financing in your sales process so you can really get the most out of it. We're going to talk about texts, emails, when to invoke it in that conversation with the homeowner. Three, Sarah's going to give some really cool stories. I know you've got a really good one about a home improvement company that added financing in the ROI they're seeing and how it's really improving their process. Excuse me. And then four, make sure you stick around. We're going to talk about text and email templates that you can start using today. Hey, Chris, I saw you ask if we've started. We have started. Just want to make sure we're good to go. But yeah, so we're going to dive into those text and email templates, and you can start using all of that today. So first, we're going to talk about the new type of homeowner and where this really comes into play. So Sarah, I know you have some really good stats around this first part. I'll let you kind of take the wheel here.
Of course. So I think it's important to think as home improvement contractors, when we're out in the field selling, who are we actually selling to? You know, what is this demographic? And I think something that's been really interesting through COVID is we've really seen home ownership rates increase among millennials. So those going to be anyone between the age of, 25 and 34. And it's really showing, clear indications that this age group is really ready to start buying homes, whether they're in the suburbs or they're in the city. Millennials are really the group that are set to actually drive the home improvement sector for, the next 20 to 30 years of the business. So I think it's important to keep in mind, these are the people that when we're in the home selling, that we'll actually be selling to, is this demographic.
Yeah. And I know that COVID exacerbated that a lot. A lot of people moved out of cities to suburbs and started, buying homes. So I know that's a huge indicator there.
Absolutely. And I think that it's important to think about that when, millennials are buying homes, they're mostly doing it digitally. And then they're moving into these homes and really looking around right away and going, okay, what do I want to fix here? How do I make this look like the Instagram, post that I saw 2 days ago, or, my friend's kitchen that I saw on Facebook?
Yeah, it was insane. Like I think it's still happening now where people are like foregoing getting an inspection on the house and just putting money down sight unseen. It's crazy to me. But that leaves a lot of potential here. Really, when it comes down to communication with millennials, and as a millennial, I can verify this. Like, I hate getting on a phone call, and Forbes even called us the anxious generation because we're so attached to our phones and we prefer to text over calling. So I think I saw a stat where overall, generally 98% of consumers ignore phone calls from businesses or businesses or unknown numbers, compared to 97% of people get a text, open it, read it, and reply. So texting is where you need to be to communicate, not just with this generation, but like my parents are getting into texting, my grandparents, they're not very good at it, random emojis all over the place, but it's still important to really make this a key part of your sales process. And at the end of the day, 68% of millennials admit to texting a lot on a daily basis, which I think is actually, I think a lot of them are lying. They just wanted to look a little bit better. I think that would be closer to 90%. I think people are texting all the time. But that's a Gallup poll. So that's pretty legit. It's official. It's the number one way for anyone under 50 to communicate these days.
No, that makes sense. And with their communication, I think millennials are different in their communication. They're different in how they buy homes. And then they're also different in just how they're paying for their home improvement projects. I think it's important to think about that. These millennials are really, really comfortable with monthly payments. They've been making monthly payments on student loans for the past 10 years. And really, Equinox found that millennials are more likely to use credit to purchase than any other generation. And really any organization that's dealing with money and offering financing options to homeowners should really emphasize both the convenience and a really digital process for seeking out this financing solution for their home improvement project.
Yeah, love that.
An interesting demographic for sure.
Yeah. So just to kind of give you a visual representation here. So this is from the National Association of Home Builders. It's something I think they put out either last year or the year before, but just to get an idea to see what the demographics look like of, what people are buying in terms of homes and owning. If you look at the general home, when it comes to repairs and major renovations, it's usually about 30 to 50 years is when people start needing, new roofs. Those 50-year warranties start going up, new HVAC units. My parents have popcorn ceilings from the 90s in a house they built. That's not in. People want to get that out. So really it's a huge demographic shift. So you got 40% under 35. Those are the millennials. Some of the millennials trickle into the 55%. But yeah, I mean, that is a huge segment that's only going to get higher. It's only going to keep growing. So you need to really nail down texting and financing in your sales process to be able to give them every opportunity and equip your sales team to close more deals. So
absolutely. And especially when we look at the price of lumber as it's been over the past couple of months, a lot of millennials who maybe would have purchased a new home build, but saw the pricing change as lumber increased, actually went and maybe bought an older home with the hopes of renovating it. And a really interesting statistic on when people are actually looking, especially millennials, on how they want to pay for these projects in these older homes. Really, homeowners, we've found, and through Modernize, they put out something every year called the State of Homeowners in Home Improvement, that 75% of homeowners want to finance at least some portion of their home improvement project. So that's a huge segment of customers that you're meeting with, who, even if they're not upfront asking about financing options, they're getting funding for that project in some way, shape, or form. So I think that's a really interesting statistic to call out.
Yeah, and what I'm interested in is the 75% stat blew me away, by the way. When I see things like project up to 25% funded, so I know we're going to talk about upsells and a lot of other stuff later, but as an example, let's say that I want to get a kitchen remodeled and you present this option for like granite countertops, which I can't put in my budget right now when I'm paying for cash. So is financing a part of that, like to where you can say, well, you can actually afford this now. I know you want this. So here's how to make your dream remodel like complete.
Absolutely. So with financing, you don't necessarily even have to finance the whole project. Just as you said, if you have, if the contractor comes out and, you're meeting with the homeowner and you give them a bid for $15,000 for their dream kitchen, but let's say they only have $10,000 set aside, they can actually go ahead and finance that additional $5,000 and pay that off in monthly payments. So that way they're redoing the kitchen to what they want it to be and live in for the next 15 years, instead of getting it halfway done and then, 2 years from now having to have someone come in again and redo the countertops.
Awesome. Yeah, I love to hear that. Cool. So I want to dive in a little bit into really the meat of what the webinar topic is today, which is when and how to offer financing in your sales process. So if you guys aren't familiar with Hatch, we're a messaging platform. We work with thousands of contractors, people. It's one platform where people text, email, and call. And what that means for us, and it makes me excited because I can go in to these conversations and actually see what's making people convert. Like, what are they bringing up that's making more people set appointments? What are they bringing up in the follow-up that makes people, sign the deal if they don't want call close? So I get a lot of insight there, and I'm super excited to share with you guys some of the findings that we've found when it comes to financing. So really, there's three main parts of the sales process that you should equip financing for your sales team. Number one is probably the most important, because this really sets the standard for your relationship with that homeowner. Before the appointment, as soon as that lead comes in, you should let them know that you have financing as an option. Included as part of every single transaction that happens with your appointment setting and appointment confirmations, which we'll talk about in a second. But there's no credit checks here. It's a free tool. And really the biggest part of this, not only in that you're building trust and building that relationship with the homeowner from the get-go, and you have competitors down the street that don't offer financing, immediately gives you an upper hand on them, but also to qualify that lead. I can't tell you how many times people send reps out for an appointment to people that just aren't going to buy. So being able to qualify that lead and get that information up front, everything down to, what their, typical budget is, what their, zip code is, all of these things that you can also cross-reference with like Google Maps or something to see what you're getting into before you actually get out there is so key. And Sarah, I'm going to let you talk on this quote for a second and tell the story about Joe. But you see here, this is a text. This is what actually works. This is from the platform. So you can see, how this conversation really goes, which is, and again, you don't have to write all this down. I'm going to provide these slides to all the attendees and give you some templates and things that you can apply in your sales process today. But it's simple. You don't have to be like Stephen King to convert leads through text or email. You just have to be to the point, and you have to start building that trust. And Sarah, I'd love you to touch on just how Joe over at Kitchen Tune-Up has seen success with this.
Definitely. So Joe has started to include the pre-qualification link in all of his text message and email pre-appointment. So this would be a good example of, if you see here for Bob's Roofing, they're asking, oh, are you available for us to come out and take a look at 10? Great, the appointment is set. At that point, what Joe actually goes ahead and does is send the pre-qualification link out to the homeowner. And he emphasizes there's no hard pull on their credit. It takes them 2 minutes. And it really just allows, when the sales rep comes out, to provide the homeowner the best possible experience in offering them monthly payment options. And I think something that Joe has articulated to me is that it really helps inform the homeowner's budget and how he approaches the sale before he even steps foot in the home. Because once the homeowner goes through that pre-qualification process, Joe gets intel on where they sit in the FICO credit score. He gets intel into the different offers the homeowner actually saw, and he gets insight into what their budget range is, self-reported, for this type of project. And so before he and his team set in to begin to sell, they actually have a ton of criteria and kind of knowledge about the homeowner that they can sell into and can help inform a lot of the conversations on the appointment. And I think Joe at this point has probably been with us for just over 3 months. And in sending out this pre-qualification has probably closed close to around $80,000 in jobs that he would have totally missed out if he didn't offer those homeowners monthly payments on their project.
That's insane to me.
Totally. And I think it's been really exciting for him because in sending out the link, just in those pre-appointment setting emails and text messages, it's totally something that's automated and he doesn't even have to think about. So that way, when he walks in the door, it's something that is an extra step normally that they would have to have a conversation about, but it's already done. Yeah. And they can actually focus on listening to the homeowner's pain and consulting with them on the project that makes sense for them.
Yeah, love that. And that's $80K in 3 months, like paid up front, right?
Yep. Because with us, when the homeowner goes through the pre-qualification, they choose the lender actually funds the homeowner directly. And then the homeowner pays the contractor. It's typically in 1 to 3 business days. So by time the project is completed, the contractor's been paid in full.
Incredible.
Yeah.
Don't have to bring that sledgehammer out, which was one of our goals. One of our goals of this webinar.
One of our goals is to keep contractors from destroying their own work.
Exactly. Yeah. So the other part of this is confirming the appointment. And if you're not confirming your appointment via text, like right after this webinar, literally, if you're not going to use Hatch, just find a tool that does this. Do it yourself. Download iMessage, anything. This is such a key piece, especially now as those pipelines are bursting at the seams. There's so many jobs getting booked. A lot of homeowners are starting to push their projects out to 2022. But this is one of the most crucial parts of building that relationship is, you stay responsive, you stay in touch, you send reminders. This is how you really grow that referral and review pipeline after the job is done. By being responsive, they will sing your praises from the mountains if they find a business that they really trust and really like. So being able to pull that out, and if you don't get the lead to qualify on the first text that goes out, then obviously use it as much as you want, use it as much as you can. It's just another option for them to really dig in and really love your business for that responsiveness.
And so I know a bunch of contractors who use Hatch actually, because with leads, it's so nice to be able to make sure that you're increasing your run rate Of course, we're always going to set a bunch of appointments, but the biggest waste of time for contractors, and I know everyone on this call has experienced this, when they go out and they knock on the door for the appointment and the homeowner's not there, there's no bigger waste of time from a team perspective. So being able to confirm the appointment, and I also love that you guys do include a picture in that so that the homeowner knows who's walking up to their house. It just goes the extra mile in making sure that your run rate is as high as it can be, which is such a huge part of making sure that, you know, you're actually winning more deals at the end, is making sure that your pipeline gets stronger as it's moving along.
100%. Yeah. Also of note, my picture's in this text, and it was going to be a lot less awkward with the CEO giving this presentation. So I apologize for that. Cool. So the other part of this, and the second time to invoke financing during this, is during the appointment. And there is no better way to really connect with a homeowner and get them to want to do business with you than creating that emotional attachment and really honing in on that and making that a big part of your sales conversation. So we're going to talk about a few different scenarios here, but it really is a lever that you can use to either upsell a project, or if they're on the fence, you can get them off of the fence and wanting to do the project. So I've got two examples here, but there's a third I'm going to touch on as well. But the first one really is homeowners moving out in 5 years. You can sell that future state for them. You can sell that you're going to sell your home for a much higher price if you get this done on top of this. And if you can't afford it right now, we can do financing in the meantime. When you sell your house, there's an opportunity there. So home renovations and updates can really increase that home value for resale. And they attract millennials. They attract, you know, the younger people that are entering the housing market, and not even just younger people. People just want newer houses. So this is an opportunity for you to really upsell them before they leave that house. The second example is, you know, people that are going to stay in their home forever as people age. Yeah, there will be a recording of this. I saw that chat. So the second example of this really is the forever home. So being able to create space for, you know, the older folks that are going to need, you know, ramps, they're going to need other things. So you maybe come in for a kitchen remodel. This is a good chance for you to continue that conversation about, think about this in just a few years. You're probably going to need this here. You're probably going to need this. We want to be with you. We want to help make your house a home by offering you these things. And if you can't afford it right off the bat, financing is a great option. The third example here that we didn't put on here, I meant to put that, but people that recently bought a home, there's studies that show that people that recently buy a high value item, say a car or a house, they're more likely to make another purchase to really get the most value out of that. So I know, Sarah, we were talking, like, when you go and buy a new car, you're immediately going to go to AutoZone or Amazon to really get new carpets, to get, you know, rubber mats, to get little scented things for your car. That's how you get the most out of it. It's the same exact thing with a house. I would argue even more so, because it's one of your most valuable assets, right?
Yep. And you just purchased, you know, this house, but you want to live in it forever. You know, you want it to be your forever home. And a lot of the times before you move in, it's actually better to do renovations then, because you don't have to then worry about actually packing everything up and then moving it back out of the home. So a lot of the times you're already financially at that point, your checkbook is out, you've written a check for the home. Why not go ahead and actually get what you envision the home being completed? That way it's ready to move in.
Yeah, exactly. And you just put this giant down payment on a house and you're not ready to get anything else. And somebody's like, you know, for $200 a month for the next, you know, 2 years, 3 years, you can really make this your dream house if you get this done. And it becomes more palatable for a lot of people, I think.
Very much so.
Mm-hmm.
And then really this is such an important and kind of the meat of how you're going to win more deals and close more projects with financing. And that's really twofold. So one would be actually closing with financing. So making sure that when your sales reps are at the home, they're consultative, they're listening to the homeowners, they're understanding what the pain is that the homeowner needs solved, whether that's maybe they are an older resident and they need the home retrofitted, you know, they need a walk-in tub. And that way they can articulate back to the homeowner the value of getting the project done now. and having confidence in overcoming when a homeowner says, oh, it's just too expensive right now, or, we're really going to have to think about it from a pricing standpoint. Because when you're using financing and presenting projects in monthly payments, it's a lot more comprehensible and easy for the homeowner to digest versus presenting it in full bulk price. Let's say you're doing an entire home, you're making a home ready for someone who's in their 60s, in their 70s, for instance. If you're presenting the pricing as, $175 a month for the next 3 to 4 years, or you're presenting it as $10,000 all cash right now in order to begin the project, you're going to find that your close rate will increase significantly because the homeowner will feel much more comfortable and they'll be able to get the pain that they need and the information that you uncovered earlier in the sales call filled. And then the second piece of it is really upselling with financing. So I think we touched on this a little bit, but once you have the homeowner fill out that pre-qualification, they're going to be pre-qualified for a range. And obviously, every single homeowner is different on what they're qualified for, and it's completely dependent on their credit profile. But you getting that intel back as the contractor will allow you to actually leverage that to upsell the homeowner for better, longer lasting products, or for their dream product. Let's say someone wants, we'll use the same example as before, a really beautiful quartz for their kitchen, and that's what their dream is. And by using financing, they're able to get that larger ticket item. That's something that, homeowners with cash might just settle and do the original project, but structuring the deal to do, part cash, part financing will allow you to actually increase your average ticket size over time. Because we find that when people are paying, monthly, they're going to be more comfortable with, a $5,000 increase on the total job cost versus if they're having to pay $5,000 in cash all up front. So really, those are the two pieces that will ultimately allow you, using financing, using monthly payments, to close more homeowners when your sales team is at the table.
Yeah, it's incredible. We talk about a big thing for us is objection handling. And you can really make a playbook with any type of an objection a homeowner would have. Obviously, the biggest one is going to be sticker shock and that price when it first gets unveiled. It seems to me that really financing is the only way to overcome that, that pricing objection. It's the most feasible, right? I'm trying to think of other ways other than well, let me refer you to the manager. Maybe we can work on a deal, which I think that kind of erodes that trust, right? If they think they have to negotiate versus if you just come straight out with, all right, we can give you this financing option.
Absolutely. And really, every single contractor is going out there and presenting homeowners with strong customer service, the best products. Everyone takes incredible pride in their work. And offering financing is just the next piece that can set you apart from your maybe 15 other roofing companies in the area to get that deal closed. And I think you're right when you get, the it's too expensive objection. Of course, you can drop the price, you can do, use different materials, but ultimately that cuts into your profit. Whereas by offering homeowners monthly payment options, it allows them to do what's comfortable for them from a budget standpoint, but allows you to make sure that you're not eating into your own profits just so that you can close the job by lowering the price of it, which happens all the time in the industry and really, really hurts contractors' bottom line ultimately.
Yeah. Awesome. So this is really the last scenario, and this is Rehash Sales follow-up. Now, Rehash, everybody thinks Rehash as they reject your first price, you go back with a lower price. We're trying to change that connotation that everybody has of Rehash, which is it's professionalized follow-up. It should be you go back in after you find out what the objection is, and you can appropriately answer it, whatever it may be. Price is the number one objection you're going to hear. We see that all the time, and it's something that you have to really coach your team on and really equip them with the tools to really overcome that. One little quick tip here: never use the word payment or cost. Always use the word investment. It's one of those psychological triggers. I found out a few of these, which is it's pretty interesting. But the conversations that invoke the word investment when it comes to monthly payments are much more likely to have the homeowner agree to doing that. So this is something called the 48-hour rule, and I'm going to explain this, and I might mess this up because it's still hard for me to really conceive it. But what we found is something we call the 48-hour rule. So after you run an appointment, if you don't hear from that homeowner within 48 hours after running it, your chances of closing that deal fall below 10%. So after you run the appointment, throw everything in the kitchen sink at this homeowner. Text, emails, calls, do what you can to get in contact with them after 48 hours. Just get them to get a reply to either give you that objection of why they didn't buy or some actionable advice so you can continue the conversation. Maybe sell them. If not, maybe sell them, 6 months later down the road if they're not ready. But using financing in that 48-hour rule cadence, very, very, very important. Very strong way to continue that conversation.
And it's a really easy soft touch where it's like, we're not trying to hard sell you again. We're listening to you. I know you said it might have been out of your price range. Did you know that we offer financing? That's a way to meet the objection and actually like have the homeowner feel heard. So maybe they will be able to re-engage with you again on the project.
Yeah, absolutely. Yeah. So those are really the three main places we see when and how to offer financing to really make a difference in your sales outreach and getting homeowners and building that trust in that relationship. So again, these texts are what I've seen in the platform actually work. And we're going to give you guys the slides after this and a recording of the webinar. So don't worry about writing everything down. This is a really cool portion because I'm really excited about the stories that financing has helped these home improvement companies and a lot of remodelers, and not just remodelers, but literally every type of home improvement, home service can benefit of something from this.
Totally. And I think when we're looking at the ROI of financing is a really easy piece to see ROI on because it's low hanging fruit. You're already meeting with homeowners. You're already doing estimates. You already have homeowners giving you price objections. So when you're weaving in financing into your homeowner communications automatically and you're presenting it during the sales call, we see that when we're working with companies and they consistently are offering homeowners financing, it increases their close rate by about 17% and their average job ticket size by about 30%. And really, I think a good example of this is Oscar. And he was someone who, when he first started using Hearth, really didn't have a process that he was following when he was presenting financing, right? And I think this is a lot of contractors that I talk to who only actually offer financing when the homeowner asks. Whereas what we really show is that when you're offering financing to every single homeowner, you're going to find that there's a bunch of homeowners that when you drive up, it's a $6 million home, $3 million home. Maybe you would think to never even offer financing to that homeowner. But those are the people who end up taking your financing because they don't want to draw out of their 401k or draw out of the market to pay for it all cash. So I think training your reps to be consistently offering financing throughout the process is the best way to see return on investment when it comes to financing versus just offering it on one-off cases when someone asks for it.
Yeah, love that. So question on this. Let's say you're not using like an automation tool or anything where you can like send out the links and stuff. How do you coach Hearth users to really be proactive with this and to really get their reps on board with this? What is there a specific talk track or a specific way you train them on this?
Yeah, that's a great question. So the biggest way that we train is when you're a contractor, when you're giving the homeowner an estimate, giving them the estimate in what their monthly payment option could be. So a lot of contractors, when they're quoting a homeowner, will give the bulk price. And there are going to be homeowners always who are going to pay all cash upfront for the $13,000, of course. And that's going to be a huge percentage of your business. But when you're in the home selling, and this is an easy thing for sales reps to do with the Hearth app, they can actually just see what the monthly payment would be based on how much the average job ticket size is that they're actually doing the estimate for. Then having that sales rep say, you know what, I heard you, your roof is leaking. This is the type of material. This is the budget that you're looking for. What we can present is we can put a new roof on next week, and you're going to be looking at, around $175 a month for this type of project. So presenting it in monthly payments versus asking homeowners if they want financing, regardless on what your process is an easy way to see those lifts in your close rate and average job ticket size without having to incorporate it in your entire process.
I love that. That's so smart. And I think as a sales rep, once you get in the get in kind of the routine of that, and you start seeing more deals start closing because you're not going in with the sticker shock.
Yep.
I think it's just a really cool all around like way to really, get your pipeline up, like accelerate your pipeline. It's awesome.
Totally. And when we think about, other items that are the same price point as a lot of home improvement projects, cars.
Yeah.
A huge example. You will never walk into a car dealership really and have the sales rep tell you the full price of the car. It's almost never happens. They're always going to present it in monthly payments, and then they might present the full value of the car because the fair majority of people will finance their car unless they're buying used or in other circumstances. But really, a lot of people pay car payments. And I think offering homeowners monthly payments on their home improvement projects in 5 years from now, it'll be the standard in every single sales process. I'm confident in that. And really what Hearth allows contractors of any size to do, it doesn't matter if you're 2 guys, it doesn't matter if you're 200, is that you're able to offer homeowners monthly payments. So this is a screenshot actually of what the dashboard would look like. We work as a mobile app on your iPad. And as you can see, you're able to offer financing directly through this. So every single company has their own pre-qualification link that they can send to as many homeowners as they'd like. And then from there, the homeowners can get offers. We have 14 lenders on the platform. So the homeowners will get offers from 14 lenders, just totally dependent on what their financial profile is.
Love that. I do want to hit on something that you just mentioned, which is, this is the future of payments, right? And I was just thinking, I'm seeing so many more companies come out, not in home improvement or car sales, but just for like general goods where you can split up like payments for, a pair of shoes or something on Amazon. It's crazy how like micro payments are becoming like the big thing now.
Absolutely. You look at companies like Affirm. I went and bought a bridesmaid dress for a friend's wedding, and it wasn't even that expensive a dress, and I was offered monthly payments on it. So I think like this to me is really the future and what people are more comfortable with for right now. Not to say you're not going to have people paying all cash, and heck yeah, let's get all cash if that can be the case. But I think the nice thing with Hearth that differentiates us from traditional lending is that we're really trying to turn financing deals into cash to keep contractors' cash flow going. So after the homeowner's funded, they're funded directly. So as a contractor, you're not waiting around, hoping that you're going to get paid for the job from, an outside lender or a bank. The homeowner would just pay you right away, either through cash, check, card, however you get paid, just as you would on an Affirm or any of these micro payment sites.
Yeah, love that. Yeah, if you can split up payments for like a wedding dress, you should be able to split up payments for like a bathroom
remodel. Absolutely, exactly.
Yeah.
And just to dive in a little bit more about Hearth. So as I mentioned, we're really a way that contractors can offer monthly payments and financing options to homeowners without having to pay dealer fees. A lot of traditional lenders are typically charging contractors, I want to say anywhere between like 3 to almost 15% in fees for every single loan, which I think is why historically contractors have waited to offer financing as a last option because they were tired of paying fees, as I would have been as well. Whereas with Hearth, you pay a very low annual subscription, and then you can offer loans to as many homeowners as you'd like, which is a good example of, what Joe Boyd does. He offers it to every single person. And I think something to keep in mind is, we work with homeowners along the entire FICO band. So down to a 500 credit score. And with those 14 lenders, there's always going to be an offer that your homeowner will qualify for, unless they're going through a pretty crazy bankruptcy or, a nasty divorce. Clients can get pre-qualified very quickly, doesn't impact their credit score. And then, as I mentioned, they're funded in like 1 to 4 business days. So you as the contractor can start work right away. But yeah, so that's a little bit about Hearth.
Yeah, awesome. Yeah, so cool. Yeah, and just to give you a little bit more information on Hatch, obviously we're talking about all these things, and really what it comes down to is building trust and relationships, and you can do that by offering lower monthly payments. You also do that by being responsive. Now you can go and look at your negative reviews online, your Google reviews. I guarantee you probably 99.9% of them are going to come down to the homeowner just being mad that you weren't responsive, that you didn't answer questions, that they just had a terrible experience because they didn't know what they were getting themselves into. So that's our main focus with Hatch, is keeping that responsiveness up. And we do that 5 different strategies. We focus on speed to lead. So as soon as the lead comes in, text gets sent out within 5 minutes, one-to-one text, so it looks like a rep is actually following up. It all comes into this platform so you can continue the conversation. We also do, rehash confirmations for appointments, nurture. So for leads that didn't close within 6 months, you can send text email campaigns out to them afterwards. And then also reviews after the job is done. Send a text to your Google My Business page. So we handle all of this. The really key part of this as a home improvement homeowner or something, it's all about having one inbox. So we talk about enabling your reps to really use financing in your process, but being able to have vision and visibility into what they're saying and what someone else is saying and being able to do that's really important. So that's really what it is. It's a messaging platform for home improvement built for it. And really, if you can combine these two, and we've talked about it a little bit, but this is how you accelerate your sales process, is by using these two things, by using texting and financing, and you're going to start seeing a lot of results. I am confident of it, especially as more millennials start buying homes, especially as people just want to have conversations with businesses and know better options for, their home improvement project.
Totally.
So,
and it just accelerates deal velocity. I know as contractors, we all get frustrated when we meet with homeowners and then it's like a 3-week process to understand like when the appointment is, have they gotten the lending, but using Hatch and Hearth together will just accelerate your deal process. So you're not waiting around to see what the homeowner will do next. It's more proactive, which I think can be super helpful.
Yeah, love that. So really, that's all we had today. I know we have a few questions, really good questions coming in, so I want to make sure we get to those. First, I want to start with some of the things that people are asking in the public chat. So I saw Rick here was asking, I've heard that some homeowners get upset when 14 different lenders start reaching out to them. Can you talk on this a little bit?
Absolutely. I think that's a fantastic question. I would say, Rick, unlike lead generators, where maybe you think that the lenders reaching out to them through phone calls and text messages, it's actually a little different in that after the homeowner goes through the pre-qualification, they see offers from all 14 lenders, but the lenders actually don't reach out to them directly. So the homeowner sees the lenders that they're qualified for, then they go ahead and they actually choose which lender they'd like to go with. They fill out the form with that lender directly, and then that lender deals with them on the application side. So the lenders aren't going to be proactively reaching out after the pre-qualification. It's up to the homeowner to engage which lender they would like to work with directly. But that's a really good question, because I agree. If I'm a homeowner and I fill out this pre-qual, I'm told it only takes 2 minutes. It can be super overwhelming if I'm then inundated with calls from 14 lenders. But I think the nice thing is that once the homeowner goes through the process, whether it's on the computer or on their phone, they'll see all the offers and they choose which lenders they want to engage with for more information.
I love that. And you're putting the entire process on the homeowner's hands too. And it helps them be invested in the process, right?
Absolutely. And as a contractor, we don't want our contractors to waste their time filling out pre-qualifications, bringing loan forms to banks for homeowners. Your time is so valuable that we want you out there selling. We want you doing jobs, and let the homeowner take care of how they're going to get the money for the project. And with Hearth, it's super easy. We also have a customer success team that will reach out to homeowners if they have any questions, or connect with them on lenders who are able to offer, any type of advice, let's say.
Love it. Rick, I saw you have one more question. I want to get to one that Chris asked, which is, I don't know if this is something you want to speak on now or if you want to take it offline, Sarah, but he's asking what's the typical annual subscription for something like Hearth?
Yeah, that's a great question. No, I'm more than comfortable answering it. It's going to depend with us on just the size of the organization. So it could be anywhere between like $1,000 to around $1,300, and that covers you for the entire year. So then you could fund, I don't know, thousands of homeowners for free. It depends on your sales process. But yeah, that covers you for the entire year with Hearth. And we also do have Hearth Pay, which you can accept credit card payments, you can send contracts. So financing is really like where we got started, but there's a ton of tools that we offer to our clients. And Oh, I saw Glenn. My jobs are usually 75 to 90K. Do these get financed typically? Yep. So our loans go from $1,000 to $100,000 for loan size. So we'll have homeowners who actually, we do a fair amount in like the tiny home business, which is a totally cool industry. Those average job sizes, they can be anywhere between like 80 to 100. So it's really dependent there.
Love that. Rick had a question here, which was, can we close the sale at the original appointment based on the pre-qual?
Absolutely. Yep.
Nice. So you just get them to sign the paperwork in the app and
yeah,
really
so they
ready
would
to go?
Totally. They would choose the lender on the appointment. They could fill out the information with the lender on the appointment. It's really, really quite an easy process. And then the lender will either approve or deny. And so you'll kind of know that on the original appointment. Yep.
Very cool. All right. Glenn is very excited through the yes in there. Chris had a great question here. After the customer selects their lender, is there then a hard pull on their credit with that lender?
Yes. So after the homeowner applies for the loan, that lender will then do a hard pull. Yep. But that's the only time there's a hard pull. And on that loan application, it says in like all bright letters, like, we're going to pull your credit now. So the homeowners definitely know. And that's a good example of like communication with the homeowner and just being really clear on like expectation setting.
Absolutely. And I think we have one last question here from Bo, which is, does the customer have to be the owner of the house? I guess the
yeah,
head of the house.
That's a great question. So they do not. These are personal loans that go directly to the homeowner. They're not home equity loans. So let's say the homeowner, it's their cousin's house, or let's say it's, I don't know, they got inherited or they're renting, but they still need a new central AC system. Because the loan goes directly to the homeowner, it's actually not tied to the deed of the house or the mortgage. So nope, they don't need to be the owner, but they will need permission from whoever they rent from or own. That's a whole different story to get permission for the project. Absolutely.
Awesome. Love that. I'm going to throw this poll up real quick. It's just an easier way for us to determine whether if you want to learn more about Hatch, or if you want to learn more about Hearth, or if you want to learn about both in conjunction and how they can really power each other, drop your response in here so we can really know that we can, get somebody in touch with you to have this conversation, sooner rather than later. Because again, I think the combination here is so powerful for contractors. And I think it's going to be honestly a game changer. The sooner you get it, the better.
Absolutely. I mean, I think any contractor, I've seen Hatch transform digital lead campaigns personally. And I think using that in conjunction with getting those extra jobs from the low-hanging fruit that are financing is such a no-brainer way to actually gain more business versus having to maybe promote out more marketing or spend more money on something that you don't know will make money for the business, versus you're already purchasing leads or getting leads in organically and you're already meeting with homeowners. So why not offer them payments?
Yeah, absolutely. We actually had 2 more questions roll in. I think we can, we got some time here. I love this part, the Q&A. So Bo's wondering about commercial lending.
That's a great question. We don't do a ton of commercial lending. It's really homeowner based, but I would say we do have some small businesses that maybe it's like a family restaurant or a dentist office, something like that. We will do lending to, because again, it's a personal loan. So it's let's say if the person owns like a pizzeria and they need a new roof put on and it's, the same size as a house and it's not going to be like tar and it's shingle, of course we would do something like that, but not like traditional commercial lending. That's not something we're super involved in.
Gotcha. Great answer. And then this last question from Chris, are these loans more score driven or DTI/PTI driven?
That's a good question. I would say they're probably more score driven. And then I would say I would rank it score driven and then debt to income. But I would say score is probably a little bit higher in the pre-qualification, but DTI is super important. It just is super dependent for DTI on how much the income is and how much the debt is. But I would say score probably is a bit higher. And it also depends on the lender, because we have such a variety of lenders who service different FICOs. Each FICO will be measured a little bit different. But Christopher, I could get you better. I can reach out and get you a better idea on like how each lender evaluates the homeowners, because there is a different process from SoFi to Goldman to Lightstream.
Nice. Love it. And then Kyle dropped in a medic's helmet or a firefighter's helmet. We were talking about parents using random emojis.
I like it, Kyle. I do need some context, but I like it.
That's awesome. Well, thank you all so much. If you have any other questions, we're going to reach out. We're going to give you the webinar recording, all the slides and everything right after this. So feel free to ask us questions there. Well, I would like to promote these answers and questions a little bit more so more people get visibility. So if you'd be interested in that too, we can just send you a quick recap of what other people are asking, so you just have a better idea of what the general kind of combination is here. So again, thank you all so much for joining. This has been really fun. Sarah, I've had a blast, and it's just awesome to hear like these new innovative ways to really close more deals and really get the most out of financing and messaging.
Absolutely. And as you mentioned, the two are hand in hand, so it works together well. And I think last thing on my end is my team will reach out. It'll either be myself, so Sarah Krebs, or Jeff Lilly will reach out and just kind of give more information on how it can work within your sales process. So look out from either, we'll probably shoot over an email after with, as you mentioned, the wrap up, and then we can reach out with more information on financing for your business and kind of your job size too.
Love it. Awesome. Well, thank you all so much. And till next time, for sure.
Awesome. Bye, everyone.